Welcome everybody to our macro moment / compound stock earnings podcast. This is Thursday, 10 o'clock Central Time. We're here every Thursday at 10 o'clock. I want you to go check out our website, www.micromomenttrading.com. On that website, you're going to find out how you can subscribe to our over 20-year published Cal report, which has all kinds of emails from our clients of how they're doing and questions, and has all our seminars and all the things that we do and what they cost, and so on and so forth. And again, www.micromomenttrading.com. We've got our regular group here today, Randy, who is pretty much specialist in our covered call technique, and Randy and Micah, who are in charge of doing the micro moment trading on daily sessions. Randy has seminars throughout the week, different times, a couple of them at night. But the macro moments are every day when the market opens, 8:30 Central Time, and each day of the week, unless the market's closed, and usually last about an hour. Returns for the macro moment, and then we'll let Randy talk about his returns. So far, tomorrow will be the end of the 51st week, and we tabulate everything the previous week, like the end of the 50th week. We were up 5,073%, about 102% a week. So tomorrow, it'll be pretty close to that, maybe slightly down. We've had a little slower week this week, maybe at 100% a week or something like that. But it's a great technique, and you're never in a trade for more than a minute or so, and you're always back to cash every day. If you've got questions out there, be sure and type them into your keyboard YouTube, and we will address and answer any questions, whoever's area it is. So, Randy, okay, you're in Atlanta, evidently, because I know it's really hot out in Phoenix. So.
Yep, I'm in Atlanta. Rained this morning.
Yep.
Clearing up right now, but it's going to rain again, I guess, later on.
There you go. Okay. Why don't you? I kind of gave a briefing on macro moment. Why don't you kind of bring everybody up to date and your schedules and what you do for your folks? I know you do a lot. You got customers that clients that have been taking that service now for. I've gotten a couple of emails, Randy, that were doing your seminars 13 years ago, and there's been an upsurge for some reason in the old traditional covered call technique, because a lot of people have either bought the book new or discovered it old, and say they just saw the book and blah blah blah, and so go ahead and kind of give the folks here an idea of what you're doing and what your returns are.
But first off, you can see that my office is kind of under construction. Since we're sequestered at home, I'm doing handyman projects around. I'm putting shelves up around the top of my office to put mine and my son's baseball card collection up there. Don't really collect anymore because he's really old. But when he was younger, we used to do lots and lots of collections. So I got lots of binders of that.
And for our clients attending, Randy is very much into is it Grandpapa League or something like that, baseball?
It's Men's Senior Baseball League.
Oh, Senior Baseball. Okay. And he plays all over the country and some places all over the world. So he'll probably throw something in about that. Go ahead, Randy.
Hey, Randy.
Baseball's kind of on hold right now. So
yeah, Randy, tell us about some of your most rare cards that you have.
Actually, when we were moving back from Arizona back to Georgia, and so we had to, we went through everything, and I actually found a set of my baseball cards from when I was 6 and 7 and 8 years old. So I've got some back in the 1950s Mickey Mantle cards and things like that. So those are probably the best ones. If you can get a Mickey Mantle card from back in the 50s or 60s, those are pretty good.
Cool.
I've heard a lot of speculation that with because they're trying to fully legalize sports betting again, like full on, and I've heard there is a lot of speculation about sports cards. They're going to blow up again and be like a huge flip business.
Well, that'd be great, because I got binders and binders full of sets from all the different years. So
yeah,
I haven't really done it. I just noticed my newest ones were 2003. So that was after my son got married, and it's like got to wait. Now my grandson is 6 years old, so we'll
And-
pull out
and-
all the cards when he starts coming
There
around.
you go. There
To
you
show,
go.
to show you how dedicated it is, you know, you hear about these sports guys always getting injuries. He still gets injuries. I mean, that's how much he's into it. You know, I mean, he's putting his whole body at risk. By the way, I
Yeah.
want to do one thing before you start off. The market's up 331 points, primarily due to the fact that oil is up 50% as of today since its low point a few days ago. So it's really driven the market.
That's crazy.
Okay.
Anyway,
Yeah.
back to covered calls. Joe, as you mentioned, that people are getting interested in covered calls again. Right now is a great time to enter a covered call because that's the most conservative technique that you can use out there in the stock market. I mean, just being in the market's got some risk, but buying a stock of a good quality company and then selling calls against it, that's the conservative way of investing and generating income. And the market's down 20 some percent from its high back in March. And if you're going to start reinvesting or getting money going in the market, buy some good quality stock companies that are low now and start selling calls against them. Learn the compound stock earnings way so that it lowers the risk. It makes it much more conservative. But even if the market goes lower, keep generating income on it.
Explain about our concept where you're treating those stocks like real estate. And
yeah, and you're basically renting them out. So
exactly,
you buy a stock, you pick whatever company that you like that is still going to be in business in a year. Don't pick a company that is going to go out of business. But good solid quality company, and especially one that pays a dividend as well. You're going to collect the dividend. You can sell out of the money calls and generate income. You're renting that stock out to somebody that's willing to pay you to have the right to buy it for more than you bought it for, and they're going to keep paying you money over and over and over again, week after week after week, and you're generating income and then collecting the dividend along the way. So that's a great technique.
Yeah, Robert Kiyosaki was pretty famous speaker and such in the real estate area. And that's why he wanted to write the foreword to our book, Covered Calls and Leaps of Wealth Option, because of that, because he had never seen anybody that treats stock as if it's real estate. He was pretty impressed with that. And so that was a good, famous little name for the book. Also, explain how you get such fantastic leverage without borrowing money, the use of margin.
Well, and so the traditional covered call technique that Joe wrote about in the book and the seminar manual, that's what I was just discussing. And then in the covered call platinum service, which is advanced covered call technique. So once you really understand what you're doing, come on into the advanced techniques where we are, as Joe said, leveraging the capital. So instead of buying the stock, say that it's $100 stock, instead of paying $100 for the stock, we can buy an option that expires way out into the future. They're called leaps, and then sell options against those, generate income against that. The leap is much less expensive, much less at risk in the market because you're going to pay $10 for the option instead of $100 for the stock, and you can still generate the same amount of cash against that option as you would against the stock. So it just raises the returns on your capital that's actually invested just astronomical levels. In fact, Joe, I'll go through last week's positions that I closed out using that technique. ENPH 31.9% return, and that's with all the capital returned in addition to the income. The VIX 5.2% return, GILD 20.4%, XBI 19.0%, Microsoft 113.6%. Yeah, that was a good one. Because Microsoft, it just keeps going up. Moderna 23.4%, JP Morgan 11.1%, and Apple 6.3%.
And that was just last week, right?
Yeah, that was just last week. Those are the positions that were closed out last week. This week I've got another 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Another 13 positions, and all of them are in the money, which means that they will be closed out tomorrow with all the capital return and their income locked in after that. So
Incredible stuff.
and
And
that's why the market's, been, everyone, you listen to TV, oh, we're down 20, 30%, whatever. It's like, yeah, but there's always positions that are going up when the market's going down. So you just got to know how to go find them.
yeah, all we want to make sure is the company just stays in business.
Yep.
If it stays in business, you're going to keep renting it. Just like real estate goes up and down all the time, but you just keep renting it and adjusting rent and stuff like that for your income. And one good thing about the covered call techniques, the various derivatives of that, he even has one that's pretty akin to the micro moment stuff, but it's a little fast for him. But the covered call ones, you can actually do a trade, go to sleep, and wake up a month later and never have looked at it and make it exactly what you knew you were going to get, exactly precisely you're going to get what you thought you were going to get. Where the macro moment, you're in and out of deals every 14, 15, 30 seconds or something like that. So for somebody, our older clients like Randy, it's really, really, really a great technique. So
yeah. There's a question. Gary says, are these weeklies you're talking about? Absolutely. These are all weekly options. And so I'm in and out of them within 4, 5, 6 days. I mean, sometimes I enter on Friday and get out the next Friday, but typically, like I entered GILD Monday, Disney Monday, JP Morgan on Monday, IBM on Monday, Tuesday, Microsoft and Netflix, and yesterday Roku. And so those are all going to close out tomorrow, and unless there's a major decline in the market between now and then. They're all deep in the money right now, which means that the stocks can even go down, and they're still going to get closed out tomorrow for return to capital and lock in the income as well. So
I have a question for you, Randy. Coda, stop it. So Randy, we've been struggling with micro moment in the fact of option movement. I guess my question is, how are your long-term deltas holding up? Because I was just watching SPY on this last little leg down here, and two separate times it pushed down 20 to 25 cents. I was watching the 280. We got 1 day till expiration. It's a 33 delta, 38,000 contracts traded. It's $1.38, right in that range, and it moved 1 cent. The bid moved up 1 cent from the beginning of that drop to the end. So is that only in the extremely short term, or are you seeing some extra slow movement? Because I mean, a 33 delta, on a 20-cent move would be what, 6 cents, something like that, 6 to 7. And we're seeing that every day. What is that like for you?
Yeah. Well, if you're doing like trade the moment or micro moment trading, that change is critical, because it really has to do with the volatility. So the volatility, like when the market's going up, the volatility is going down. And so that market maker, instead of adding to the premium, he's just changing the delta. And so you're not really getting that profit that you really should have been getting. With the platinum covered calls, we're just all based on the strikes of the options. It doesn't matter really what the deltas are. It's just if I buy the 75 call and sell the 76 call against it, as long as the stock stays above 76, it doesn't matter what the delta of the options become. As long as the stock stays above 76, it's going to get closed out, all the capital return and the income locked in. And so GILD is at 83 right now. So it just has to stay above 76 at close tomorrow. Gotcha. And so those are called in the money covered calls. And that's what we invest with. That's Joe's technique he developed years and years and years ago. But that's what makes it more conservative, is we're buying in the money calls. That's not what the market does. The average trader out there, if you ever listen to anything about options on TV, that's not what they do. They're speculating. They're buying out of the money options that are 100% time value, and those are heavily dependent on that delta and that decay of the time value and the movement of the stock price compared to the change of the delta and where the option premiums aren't changing. But with being in the money, and especially deep in the money, the impact of that is minimal. And so time decay actually works in our favor. That's the big thing about covered calls, is the time decay is beneficial. When you're doing micro moment trading, time decay is not good. But the covered call process, time decay is our friend. And that is going to happen. That's along with death and taxes, I guess, is time decay on options. It will decay, and that's where the profits come from. So it's great to know all the different kinds of processes so you can implement the one that's most beneficial at the time. And so as you know, I trade all the different techniques. I do micro moment trading. I do momentum trading. As a matter of fact, while I was talking, my micro moment trade just filled. So I just got, I heard the ding. So you can always listen for the ding. And so it dinged. I looked over. Yeah, there was my profit on the SPX put. So
get back to the question that the gentleman asked about is a week or these weekly.
Yeah, weekly options.
Along about 14, 15 years ago, when I discovered Randy, a blind man on the streets of Atlanta, they only had once a month expirations. That was the third Friday. Now, you could always get out of a deal, but the mandatory expiration was the third Friday. Back then, Randy and I went trying to get 3% a month, 36% a year. And times have changed now over this 20 some odd years. And now they have weekly expirations. First, it started off, and not every stock is still at weekly expirations, but they're all getting, it won't be too long, they'll all be there. And, and some have 3 expirations a week. So there's all kinds of opportunities to make, 5% instead of once a month or 3% once a month. You could make 3%, 5% every week. In some instances, twice a week. So it's just a huge, huge, huge technique. So.
Yep, they're great, and they're not quite so time sensitive as what Micah and Tim were going to talk about. You don't have to be sitting there watching the screen moment by moment.
I know. I'm getting ready to say something about that. I'm real hesitant. I'm real nervous about Tim, because when he's looking straight ahead and just his eyes are moving back left and right, he's doing a deal. Did you
he's doing some trading because it's been going down.
That's right. Really, he makes me real.
He's been quiet because he's doing his trading right now.
That's right.
But that's why you'll see, like Mike is turning. We're always turning our heads because we're looking at all of our charts and we're looking at what's going on, even while we're talking and going through stuff. So there you go. See, Mike has got his screens there. I've got my 3 screens over here. So we're just always looking and saying, is there something that we could be doing? Because there's Tim's. He's got his up there. And there's the intraday streaming chart that Tim was showing. That's the proprietary chart that Joe's got for helping. So that's one of the big things, Joe. We're not just speculating out there. We have these advanced charts to help us with the entry and exit points, to give us all kinds of extra information. We're not just shooting from the hip. We're following a rules-based methodology and process to see this is where the chart says it's time to get in. And without that, you're just out there shooting in the dark and speculating.
Another thing about Randy's technique is, again, besides being a little bit slower than micro moment, but it's certainly huge returns, is that once you enter a position, you enter the position based on certain rules. And no matter what happens to that stock, you're going to come out a winner if it continues. If it just starts going down and going down every week and every day, we've got techniques where you continue to, buy back calls, for a profit that you sold for a lot more, and just keep going. And pretty soon you don't have any basis in the stock whatsoever. But you never lose money if you're following the technique directly. The only way you're going to lose money if the company goes out of business. And I've only had that happen one time. I forgot the name of the company now. It was a long time ago, but it went out of business. But diversification, so it wasn't that big a deal. But
I remember one way back there, Countrywide, mortgage or finance or whatever. It didn't really go out of business. It went down to almost nothing, and then Bank of America was kind of forced to kind of buy them out.
There was one that laid cables. I mean, it laid cables across.
The one that laid them across the ocean. I think it was. I remember that company. I can't remember the name, but I remember doing some cover calls on it. Fortunately, I wasn't in it when it kind of went south. Then, of course, there was like Bear Stearns and those types that hit the financial crisis that went out of business. So
Yeah.
but typically, that's why you heard the kind of companies Microsoft. I don't think it's going to go out of business. Apple. I don't think it's going to go out of business. So it is critical to select and the cover call screener that Joe has put together goes through criteria to help improve the probability that that company is going to be in business in a year from now. So we use some fundamental and technical criteria to even select the company that we might be doing our cover calls on to start with. So that's the beginning, and then the charts become the decision process. So
Randy, I don't know if you're aware of it, but there is a video, or there's an image here of a person that's considered to be a stock abuser, and he's the youngest guy here, and his favorite stock to abuse is Apple. And it's the funniest thing to hear him trade, because he gets so excited, gets so emotional, he hits it. I'm hitting it again. I'm going to hit it again. And now it won't even have hardly anything to do with it. It certainly will not go anything to make you money. So
see, he's in and out of Apple like in 15 seconds. So see, my Apple position, I got in last Thursday, and it closed out on Friday. And so that was a 6.3% return for a whole day of investment. See, Micah goes for 3-4% for like 10 seconds. When he's doing Apple. So
let me tell you something that's interesting about Randy. When he started doing this, he was with a major company, and was with them his entire career, and high up in the company. And so, but they decided to have not a layoff, but a buyout. And so a lot of his contemporaries went to a session where they had these financial experts in to tell them if they really could afford to retire based on what their other financial circumstances were, plus the fact that they owned a lot of stock in this company, which pays a dividend, and has probably for 200 years. And Randy was one of the few that they couldn't believe it. He could afford to retire. He could afford to leave the company, because he had already started doing the covered call technique on the stock he owned in that company. None other, just the stock. And he still has that stock, and he's still doing it. It's going on 20 years now. But he was able to retire. Very few others could retire, but he was able to because of his covered call income. And if you got existing stocks, there's nothing better. If you love that stock, keep that sucker and just sell out of the money calls near months, and you're never going to lose your stock. And if you ever get called out, you're going to make a lot more money than if you did get called out. So, and you still got your stock too. But,
and if it's one of the hundreds of companies that have weekly options, you can actually sell weekly options against it and generate income every week.
Yeah. And then we had this stuff going, he came to a seminar early on, and the poor fellow, he got lost in the elevator, because I told you I found him on the streets blind. He got lost in the elevator and didn't get back after lunch. So it's been a real hassle with Randy over the years. But,
a long story.
But yet he persists.
There it is.
That's right.
Going.
But
another huge benefit of learning these techniques, we're working from home to start with anyway. So all of this quarantine and all that, other than the fact that it makes our hair get longer and longer and longer because we can't go to the barber shop. I still call it the barber shop because my dad was a barber for like 25 years. So but other than that, we're just doing the same thing we were doing a year ago. We're just generating income from the market.
I think all three of us, except for Micah, called it a barber shop. He calls it a salon naturally.
So
we go to barber shops. Bill, Joe, just curious, do you still trade? Yes, I do. Yep.
Really? What do you trade, Joe? I haven't heard.
Great. Oh, I do not only some covered calls. Yeah, I still do. I'm doing the micro stuff. Yeah. Melissa. Hey, I don't think I've seen the photo. Now we know what Melissa looks like.
Huh.
Thank you, gentlemen, for your patience and persistence in teaching us how to create our own financial destiny.
She was
Thank
at that seminar.
And Melissa is on our micro moment trading morning sessions every morning, and she does extremely well, and we have a lot of fun. Peck, what size portfolio do you need to use the covered call technique to cover call subscription costs and generate about $2,000 a month? Who wants to take that?
Well, if you're doing the traditional cover calls where you're buying the stock and selling the calls, you're going to look at 3 or 4% a month. And so, if you want to do 2,000 a month, you divide that by 0.04, and you're going to get whatever that is.
50 grandish.
Yeah.
Yep.
2,000 divided by 0.04. About 50,000. So you don't have to have millions of dollars, and that's the one thing when Joe talks about retirement way back when. All the financial people, they go through and say, well, you can count on about 3% a year return, and you can't spend more than 3% a year of your portfolio. Therefore, you need like $1.8 million to retire. And there was that was that AIG, the old AIG commercials that they showed people carrying under their arm the number that they had to have for retirement.
Yeah,
And it
I remember that. Yeah.
was like $1,832,000 in order to retire, to make sure you could still have money when you're 85.
Right.
You can generate percentages a week.
Yeah.
You don't have to have $1 million. If you have $1 million, you only have to invest 50,000 in order to generate good income, and you can keep all the rest safe somewhere else.
To show you the power of compounding, and you see most mutual funds use 6 to 7% a year, and you see these things in the financial books all the time. Somebody says, "Well, what? I'm 35, I'm 25. How much do I have to save to retire when I'm 65?" And so they'll say, "Okay, well, we're going to use 7% a year," which very few of them get that, but they'll use 7% a year, and they'll start you off. And you have to put money in every month. Let's say you're 25, and you're going to start off with the minimum amount, but they got you down there to put $350, $600, $500 starting off. It's going to go up over all of those 35 years. And at the end of those 35 years at 7%, you're going to have maybe $1.2 million, maybe $1.2 million. Now, 35 or 40 years from now, what the hell's $1.2 million going to buy? Not much. And so and besides that, you've struggled and strained. You didn't have money. You was paying off student loans, doing all that kind of stuff. But people eat this stuff up. They think that's big. Where you can start off with $2,000, and accountant just use Randy's stuff or Tim and Micah's trading. And if you just make 6% a week, not a day, they make 102% a week, 6% a day. A week. At the end of 24 months, you're going to have over $800,000. You never put more than $2,000 in there. And at the end of 24 months, you're going to have over $800,000. And then I say this. And at that point, you say, okay, I'm going to just start paying myself a salary. So you take 6%, $800,000, $48,000. That's going to be your monthly salary. Leave the other $48,000 in there. Let the thing keep compounding. Huge. And that's just $2,000. And never put another dime in. You leave in there what you're making, but other than that, it's just compounding. Peck, again, I was really asking about the new technique using the weekly options. Well, that's sort of what I was talking about right there. Peck, are you talking about the macro moment, or are you talking about Randy? Because Randy's is weekly now. Either way, anybody want to answer his second verse of the question there? He was talking about the new technique using weekly options. Okay, there he is. Yeah.
Again, the amount to be invested, the platinum technique is generating probably about 4 or 5% a week on what's invested. So if you want to, make 2,000 a month, that's 500 a week. That's 12,500 invested. You still need to have, mostly to manage the weekly options, because we're sometimes in and out in the same day. You need to have at least 25,000 in the account so that you can do day trading. even though they're not really day trades, but sometimes they close out within the day. So, but with that kind of money, you can generate some pretty good income.
Here's Brian. Today, I discovered a limitation as I started trading a higher number of contracts because I'm on a cash basis with TradeStation. Prior trades used up my available cash for purchasing contracts.
Yep. So on most platforms, you get a daily settlement on options, and it's every other day on stocks. Basically, if you buy and sell something, then you have to wait. The day after tomorrow, you can buy it again if you're on stocks. But options is the next day on a cash account. So all those trades you make, you can use that. Let's say 12.5, right, is your account size. You can make 2 trades at 6,000. 12 trades at 1,000, and once that's done, then you're done for the day. Clears overnight, and then tomorrow you go again. So,
Pat,
any chance of a seminar to teach beginners how to set up the charts and make trades on the micro moment technique?
go ahead. No,
Yeah, we do that
yeah.
every month.
Yeah, well, we just had one several months ago. Very first one. We limited. You had to be there in person. It was in Fort Worth. We only allowed 25 people. We didn't have it online. Usually it's online also, because that's the first one of this we had done. And Tony and Tim wasn't with us at that time. Tony and Micah did the seminar. And, of course, our support staff were around. It was really, really great. We had a Friday night cocktail party. We had a dinner Saturday night and, blah, blah, blah. It's really, really neat. We were supposed to have another one in March. And as you can see, what happened in March. So, yes, we will have another one coming up. It will be in Fort Worth. And this time it will be in person and online, so you can attend online. And it'll be obviously not limited to 25 people, and it's going to be a lot of fun. And it's people you meet, and even Tim's a nice guy and a lot of fun. But so yeah, we're going to have that. Yeah. You got some more questions for us? You doing a good deal, Tim?
Yes, sir.
That's just
taking this put on QQQ here, and we're out. Okay, I can pay attention.
And Tim, your technique that you talked about a few weeks ago.
Yeah.
The tick goes down, goes through the lower Bollinger Band, just keeps going. That's what just happened.
Yep, that's exactly what just happened.
Yeah, that's. I'm watching it right here, happen in real time. I'm going. Yep. I know Tim's in because it just crossed right there.
Yeah, Keith, and Mike is looking at it too, I'm sure.
When these guys are doing their daily the micro moment trading thing, they're teaching you based on that chart. Like you're looking at that chart, and you know what they're doing, which trade they're getting ready to enter, and you see it happening. But you see, more importantly, is you learn how to read that chart yourself. You learn when to get in and when to get out of trades. That's what that whole thing is for. It's not necessarily for you to follow their trades. They have to do something. Those are real trades with their real money. And but that's what you learn. And it's an amazing sessions we have. And Brian, who's been on here with the questions so far, he's pretty much new, but he's really discovered something and says, oh, that whole thing changed all my trading, just what Micah said in that one statement right there, blah, blah, blah. So it's just really important stuff. For the online attendees of the MMT seminar, will we also be able to see the option chain while doing the trade? Yes, you will. Yeah, it's just like being there. And we've been doing those seminars for over 20 years, the covered call seminars for years. A gentleman from Australia, and I did them. And then when he left, Randy took over, and we've done them. They're online and they're in person. And yep, you see everything. So
yeah, be a lot of fun.
Yep. Give us some more questions here.
Yeah, and I mean that's the main point. It's really a fine balance to walk, right? As a teacher, people want to see the trades you're doing in real time and they want to follow them. That's just the natural, nature of people that are looking to learn a technique. Everybody walks in thinking you can watch somebody do exactly like they do and make money off it. Most of the time you can, because they're swing trades, something like that. You just don't have that ability when the trade is. I mean, my 2 trades today were, let's see, that one was 26 seconds and that one was 34 seconds. So that's entry to exit, fill, complete trade in under 30 seconds. We don't have that ability. But once you understand what we're doing, then Randy can look at the chart and know Tim's already in. See, they weren't talking about it, nothing like that. Yeah, we had the cue that Tim was looking at the screen, but we understand. I knew Tim was in too. I saw that crossover he was talking about. Once you understand the chart, that's our goal for all of our clients too, is to get to the point where they understand in their own timing. Because if your whole trade is 34 seconds, then the 3 seconds it takes to place your limit order, get filled, and confirm that you're fully filled and not a partial is the 3 to 5 seconds that can change your result 3 to 4 cents. I mean, there can easily be, you know, that much movement within that 5 seconds. So, you know, to break it down that finite, we have to just teach you how to do it and get you to the point where you can see it like, you know, Randy and Tim. There's just no easier way to do it.
Let me say something here, and then Micah can answer this question from James. So James, hold on a sec. One of the big advantages of Randy's technique and of Tim and Micah, there's no speculation here. You know, most people in the market are speculators, and you know the market opens down or up, you know, and then goes the wrong way, and they lose money because speculators never win. They don't speculate about anything. It doesn't make any difference if the market's going down or up when it opens. These guys know exactly precisely what to do. They're going to do something. Randy's going to do the same thing. His only key on creating a covered call position, just like it is for these guys, a little different way to look at the chart, is he doesn't care if the market's going down. He's going to enter a position, but he's going to enter it at the right place on the chart. And that's the key to it. And you see that. So you're not speculating what it's going to do. It makes no difference if it's going up or down. Michael, why don't you take James' question now?
Are there disadvantages to using E-Trade versus using TradeStation for the micro moment trading technique? Technically, yeah. I would add Thinkorswim to the TradeStation as well, TradeStation and Thinkorswim. And E-Trade might have done some updates. So the 2 things that we use that are very helpful are the matrix, which is it's like a level 2 for each strike price. So you can see just that strike price moving up and down, just that option contract. So that's on Thinkorswim as active trade ladder or something. What's that called, Tim?
Trader.
Active trader. Okay. Yeah, so it's the ladder on active trader and the matrix on TradeStation. And that's very helpful. And also hotkeys, which is basically programming your keyboard to be able to click one button and it does a task for you, which E-Trade doesn't have that feature as well. They have it, but you can only, you know, say if Control X was buy, it would just fill into the ticket what I wanted to buy. It wouldn't actually execute it. Whereas TradeStation and Thinkorswim, this was when I used it, you know, almost a year ago, 6 months, I think. Maybe it's been shorter. But the hotkey execution is really important too. So those 2 things, if E-Trade doesn't have those, technically you're at a little bit of a disadvantage, but still totally doable.
Okay, this one's from Brian. What is the meaning of the red and green arrows on the charts? Are they new or have they always been there?
Yeah, I'll do that one. Brian, they've been there as long as I've been here. That's a 0-point price oscillator. It indicates whether the price pressure is being pushed up or if the price pressure is being pushed down. If you have a chart open now, you can see it's kind of fluctuating between green and red on Q. So, and it's about the same as the one preceding it. So the price pressure is staying steady about there. This also gives us an indicator of volume. Obviously, the larger the charts, the more those bars grow, the more volume is being, the more contracts are being exchanged. Green, the price is moving up. Red, the price is moving down. We we don't necessarily use this actively in making our trading decisions. It's a further confirmation. It kind of tells us what the price direction trend or bias is. Right now, the bias on Microsoft SPY and Q is clearly toward the put side. So that's what it is.
Here's one from Frank. I'm going to give you one answer. I'm going to turn it over to these guys. They give you the other. Okay. Frank says, I still have trouble getting out of a losing trade quickly. Can you go over your MMT, micro movement trading criteria for determining when you bail out of a trade?
Yeah.
Now, Frank, what you're supposed to do is, and I know what you're doing if it's not working for you, you're thinking psychologically, you're thinking, oh, it's turning red, it's going the wrong way. But if I hang on here a few minutes, it'll turn back around and go up. You don't do that ever. Once you see that red, you start getting out. You just do everything you can to get out of that sucker and don't worry about it. Because when you do that, it's going to be very minimal loss to get out, maybe 1 or 2% max. And then you come right back in and you may do a trade on that same strike within the next 5 minutes and be successful.
I got something for you as well, Frank.
Yeah, go ahead. Yeah.
Well, pardon the rudimentary. So we got the bid ask here.
Okay, graphics, I love it.
When you're moving up, I just don't usually have a way to draw it right now. We're going to use paper. I think it'll be interactive and fun. So when you're having a bid ask, you're in a beneficial push, right? We work with calls and puts, so we're going to call it beneficial and not, right? Because if a symbol moves down, you can still make money on the put. So as you have beneficial movement happening, right, you have the bid ask, things are filling all the way in between, right? They're separated. This is called the spread, obviously, and things are filling. When the price is going in that direction, everybody wants in. So they're willing to pay more on the ask for it. So the fills are going off right here on the ask directly, right? Now, when that stops moving, when you see that peak and then it starts to turn, the direction shifts from going this way to going this way. What things are filling it. So that's why we get out right when it stops, right? We don't wait for it to turn. We get out when it stops, because when it starts to turn, the fills automatically transfer to the other side of your spread where everything's actually taking place. And that alone is your 3-cent difference that you're probably running into. So when it pauses, when it stalls, when it just doesn't do exactly what we want, we just get out right there, because if it starts to turn, you're automatically too late.
Yeah.
3 or 4 cent loss is still totally manageable, but to avoid them, that's, you just need to be earlier, and you're gonna get out of some trades that would have been profitable. It happened to me today. I got out, and then a few seconds later, I would have won on it. But
yeah,
in the long
run, but your trades were like less than 2%. They were like 1.5, 1.7 negative. Yeah. That's what you want.
Yeah. Yeah. I mean, those are perfect acceptable losses. A couple other suggestions for you, Brian, is review your trades each day and look at when you're getting out. Also, as soon as you get in a trade, put in your limit order to get out. Okay, so it gets up in that list quickly. You want to do that just as soon as you fill that order. Go ahead and set your sell to close order.
Okay, Melissa, Micah, did you use E-Trade Pro when you were on that platform?
Yep. Yeah, Power E-Trade is a light version, half rate, and it doesn't have any tools on it. It's pro or nothing for sure. When I was really young, I used the web version. When I first went live, it was on my 18th birthday. I finally could make a live account, and I was switching between the ice charts, Yahoo Finance, and my web browser E-Trade, and making one contract trades on one laptop, switching between tabs. It was a mess.
Oof. That's tough. That's tough trading.
Mess. Yeah, didn't even have an option chain. I had to type in,
the next time we have the live seminar, also, I don't know if you've noticed, but Tim's got a bunch of guitars. And you can't see him on here now, but our engineer that's been with us now for 20 years, that's running this thing, has a band, and quite good. Plays a lot of gigs around Dallas. And then we have Deshaun, and Micah are what kind of singers y'all? Rappers or what? What is that y'all sing?
We're soul sisters. We sing.
Oh,
karaoke. Well, I sing, he dances interpretively.
Okay, so we do the next seminar. We'll have a little break with musical content. That's right.
Yeah, I also have a keyboard here that I write EDM on.
You do EDM? That's awesome.
Yeah.
Yeah,
I know, little old for EDM, but it started a long time ago when I was in my.
Yeah, exactly. Synth was EDM, is the birthplace.
Absolutely.
Well, Randy, I don't know. He didn't play. He didn't have any instruments. But Marcus, his band. Hey, Marcus, come on. You have to show your picture, but just tell us what that y'all kind of music you do.
Well, the name of the band is What's the Frequency, and we are an REM tribute band.
Oh, right on.
There you go.
Love REM.
We keep getting people liking us and building. And so during this coronavirus thing, we're becoming super famous online.
Nice.
No way.
I mean, not really, but it's like every day somebody finds this. I guess people are bored. They go, "Oh, we like this." So popularity grows as we sit in our houses.
Are you guys on TikTok?
No, we're on that thing called Facebooky or something like that. Facebook. Have you heard of that?
Facebook.
The thing that the kids don't use anymore, Facebook.
Yeah.
I don't know why we couldn't have one of those on this show right here. I mean, we'd have y'all get your instruments out and Now I've seen a video of Marcus's saying they're fantastic. Seriously, he plays the piano and gyrates around back there.
Yeah,
good. Yeah.
Right.
Okay, guys. Well, we're 46 minutes in. We almost ran over our allocated hour last time. So we've got a few minutes left. If somebody wants to ask a question, best do it now. There's Brian again. So if I'm supposed to enter the sale order at the same time as I enter, then why not an OCO or OSO order?
I'm supposed to enter the sale order at the same time.
Yeah.
You can use an OCO or OSO.
Yeah.
Yeah, absolutely. Yeah, that's just preference at that point. If you wanna send, if you want to be precise. See, the only problem with OSO or OCO, it's the same every time. So if you want to tailor it to the movement, which we don't really, all of our exits are the same. But if you want to have more control over that moment to moment, then you don't have to use that, but it's definitely an efficient way. We have a lot of people that do drag and drop too. So they'll set the bracket and then just drag it around.
Yeah.
Looks like Marion is online there, Joe.
Yeah, she is.
Hello, Marion. How you doing?
Her question is EDM question mark and then with a funny face after that.
Yeah.
What
And
is
it stands for electronic dance music.
Oh, okay. There you go, Marion.
Boom, boom, boom.
Brian again, our serious contender. I'm trying to determine the right way to enter an order on the trade bar with a buy at a limit, a sell at a limit, and a sell at a market stop.
Is Brian on TradeStation?
Brian, what are you on? TradeStation or?
Yeah, he is.
Okay, seems a bracket order would be perfect for micro moment trading. No. Yeah, bracket order would be great. What we found on TradeStation is we're almost doing just ticket trading now. Just for us, it's become the most efficient way to do it with a macro that cancels very quickly. And Micah can explain that much more better than I.
Yeah, we can talk about it more on the webinar too. The problem, Brian, is I agree with your setup, but it restricts you to either sell limits or market sells. So you can do a one limit, two stop setup. Yeah, but both stops either have to be the same. Now keep in mind that TradeStation has a thing called Easy Language. Easy Language is a full-on coding interface. So, you could easily, make something just by modifying one of those, because you can edit the individual coding of each thing. That gets, we're getting really in depth on that, but it's technically possible. But that is how in depth you're talking, and it's just part of that.
There it is. Oh, mushroom music. And
Yeah, it can be.
with a little dance. And I got to tell you, Randy has this real smug look on his face. He didn't want to interrupt Mike. I think he must have gotten out of a good deal. Is that right, Randy?
I think he was laughing at mushroom music.
Yeah, mushroom music. Well, but no, I've already done 1, 2, 3, 4, 5, 6 of my micro moment trades today. So I'm probably about ready to just call it a day on those. You never want to push your luck, too far. But it's already over like 11.5% return for the day. So
there you go.
That's pretty good.
Pretty good. Okay, well, if there's no last minute questions, we'll hold off here just a second. We've got about 9 minutes. I didn't even know this was limited to an hour. Remember the last time we didn't know that. We had like 5 seconds. So.
Oh, and it kicks you off.
Yeah.
I think so. Yeah.
Okay. Well, we'll call it a day. Thanks everybody for being here. Go to our website, www.micromomenttrading.com, and also has the with that site is the compound stock earnings site. So you got everything in both of the techniques. It's all right there, and you can sign up for our free cow report, which goes out every Friday. You get all these emails from in the report, not to you individually, seeing how our people are doing, what they're doing, what they're making, so on and so forth. Appreciate you guys coming down to this one spot. Mike up there in Washington State, and Tim down in Georgia, and Randy over in Georgia, and me in Puerto Rico. There you go. We're properly decentralized here.
Yeah, that's right.
So
that's right. Although we're overrepresented in the Atlanta area,
but we're socially distanced.
That's right.
We are indeed. I think we're more than 6 feet apart.
Yeah.
Social distancing before it was cool.
Yeah. Okay, guys. Thanks very much, and thanks everybody for being here. And we'll see you next Thursday for the podcast. Bye.
All right. Bye bye.
Take care and stay safe.
Thanks, guys.